do you expect one last flush come this fall?
I think it's certainly possible. I would bet that the bottom is in. I think we'll be significantly higher by the end of the year. The market stops reacting to bad news, and that's the single best indication that you're at the bottom. Everyone who is going to sell has already sold. There's always an attention trade, something that's soaking up all the juice. At the basement, conversations haven't ended at the largest institutions in the world. And it's almost as if there is no bear market. It is just a runaway bull market, which is a 10-year supercycle. Some people want the Fed to step in and bail it out, and he's just not going to do it. The real challenge for the economy is Warsh is only controlling this. I do think we're starting to get the self-reinforcing escape velocity from which there's no coming back. And I think it's really sad for America. It's good for Bitcoin. If you think about the evolution of strategy, I think they're entering a 2.0, but the early phase is over. I'm tempted to say something like, do you wish you never launched Stretch? I think the interesting question is there a period where they do nothing? Nothing's working. We'll just wait. And what does the market do in that scenario? Because I think it's probably likely.
All right, Mr. Matt Hougan, thank you so much for joining us today.
Thanks for having me. I'm excited to be here.
Absolutely. We are in the middle of the summer doldrums, as some might say, over on Wall Street. People go away from their Bloomberg terminals. The markets sort of quiet down a bit, but not this summer. Things are definitely heating up in the stock market, maybe in a negative direction, but Bitcoin is staying flat, building a base, you might say. Would you say the Bitcoin bottom is in?
I think there's a good chance the Bitcoin bottom is in. I hate to be mealy-mouthed in my answer, but assuming that we don't get a dramatic risk-off move in the broader stock market, I think then the Bitcoin bottom is in. If we see this AI concern turn into the bubble bursting and a 20% pullback on the NASDAQ, I think we could go slightly lower. But regardless, I think we're in the bottoming process. I would bet that the bottom is in. I think we'll be significantly higher by the end of the year. And I'm feeling great about how steady Bitcoin is in the face of the volatility we're seeing in the equity markets.
Yeah, your analyst over at Bitwise, Andre Dragos, just put out a great chart showing that there's intraday sensitivity to negative sentiment is its lowest on record, similar as 2022 bottom. Does this feel that way to you in terms of the apathy and lack of caring, and yet Bitcoin still showing resilience here at this level?
Yeah, that's absolutely right. I mean, what happens at the depths of these bear markets is that everyone who is going to sell has already sold. And therefore, the market stops reacting to bad news. And that's the single best indication that you're at the bottom. I felt very good about Bitcoin back, if you remember, when Stretch traded down to 75, the MicroStrategy preferred stock instrument, and Bitcoin just shrugged. And then MicroStrategy announced a major sale of Bitcoin, and Bitcoin rallied. That to me was the first sign that, you know what, maybe this bottom is in, because all the sellers are gone and all we're left with, for lack of a better word, is diamond hands and new buyers from the institutional community. I think that's what we've seen since the start of July, and it makes me, really optimistic.
All right, well, I need to make a little bit of a joke on your behalf because we talked back in March and you said that crypto winter is thawing and it could be over sooner than we thought. Well, that was March. I guess the groundhog saw its shadow because we are still pretty much in crypto Bitcoin winter at this moment. But I want to get your take on that because you did say that crypto winter was thawing, but we're still there in the middle of a cold January, I would say.
Yeah, for sure. Well, we were in Q2. I'm not sure that we are in Q3, but for sure Q2 was a brutal late phase crypto winter. Interestingly, I do think you started to see some green shoots in the crypto community. You saw Hyperliquid do extraordinarily well. You saw DeFi protocols actually rally in Q2, things like Uniswap, Aave, Morpho, Ondo, etc. So you started to see the green shoots that will turn into the next great bull market. But broadly, you still had this like late phase give up in the market in Q2 that does seem to have turned around at the start of Q3, right? We've been trading flat to up over the last 7 or 8 weeks. I don't know. That's pretty good. So yes, Q2 was harsh winter. But I still think maybe the winter is ending early, right? That's only 9 months of pullback. That's pretty short for a winter. It's only minus 50%. That's pretty shallow for a winter. So I'll give myself a mixed grade on that commentary from March.
Yeah, absolutely. And I mean, one thing we did see in Q2 was just that the AI trade was ripping, right? I mean, semiconductors, the Korean stock index, everything was just vertical. And Bitcoin stayed flat. And now we're seeing that AI trade cool down. Using your market experience, how worried are you about the unwind of this AI trade, or is it just a bump in the road?
I think it's just a bump in the road. In my experience, these bubbles don't pop until the revenue stops growing. The revenue is still growing at the hyperscalers. The revenue is still growing at the frontier models. The revenue is still growing sort of throughout the AI ecosystem. So this is a valuation reset. Valuation resets are only so deep. What happens when bubbles burst is the revenue rolls over and then the debt is unserviceable and you get this collapse in confidence that cascades upon itself. That's not what we have right now. We have a normal bump in the road in a long-term AI rally. So again, the tell will be revenue rolling over at the frontier labs is something that I would watch. CDS rates on debt for the hyperscalers is something that I'd watch. It's worth noting that oracles are up relatively substantially, but still not at crisis levels. You really want to see real pain before you see a bubble burst, and I just don't think we're there. I think investors can confidently, buy dips at some point in this chain. I think it has probably a year or two more to run.
We are in the middle of a midterm year, and that is usually very bad for stocks and bad for Bitcoin. It lines up with the 4-year cycle. And it's funny, Ben Cowen just put out a tweet, and it's just insane how much this cycle is lining up with the last two, right? And in the last two cycles, we had a stock market drawdown of 10 to 20% in the September August timeframe, and then Bitcoin sort of fell out after that. I mean, do you expect one last flush come this fall?
I think it's certainly possible. If it looks like the Clarity Act is going to fail and polymarket odds are now below 30%, although I'm a little bit more optimistic than that, and we get an indication of sort of a far left sweep on the Democratic side of the House and of the Senate, and we get an AI pullback. If all those things align, we could get that one more flush downwards. That's why when you asked me if the bottom was in, I said probably, but not necessarily, because I think if you get those three strikes against the crypto market, we could see certain prices, particularly on the majors, break a little bit lower. But I do think, look, this winter is going to be shallower than past winters. I feel extraordinarily confident 6 months from now, we're going to look back at this winter and say, yeah, of course, this fits the perfect trend, right? Winters are beginning shallower as the market's been getting more diverse. You have institutional investors entering the market. So could we get lower? Yes. In the end, I think that's the wrong question. In the end, I think the real question is not is the bottom in, but is the top in. I think the top is not in. And so is it 60? Is it 50? Do we go back to that area? I don't know. But it almost doesn't matter if you feel confident of where we're going over the next couple of years.
And we're confident in where we're going over the next couple of years because the government can't stop itself. Elizabeth Warren just came out with a tweet yesterday saying that there's one thing I agree with Donald Trump is that we need to get rid of the debt ceiling. We are at $39.7 trillion worth of national debt. And I do think that the Republicans sort of feel like we need to get rid of this debt ceiling while we still have the majorities in both the House and the Senate. What's your take on the national debt? It is growing exponentially, over $1 trillion of interest payments every single year now. How does this feel to you right now in
I mean, it's
2026?
completely wild. It has escape velocity, right? It can't be stopped. Remember, we're in a strong market economy. We shouldn't be running $1 to $2 trillion deficits before extraordinary spending on things like wars. And you have interest rates ticking up, which makes servicing that debt. I do think the Lynn Alden phrase, nothing stops this train, is accurate. I also think it's just spiraling out of control. And the fact that Elizabeth Warren wants to remove even this periodic check in on the debt is an incredible fact, right? If you look back at, look, the debt ceiling has all sorts of negative consequences in terms of government shutdowns that really hurt people, et cetera. But what we've seen in the past is that it does provide some sort of signpost to talk about spending. You often see cuts associated with it. I think the government is completely out of control. And I do think we're starting to get the self reinforcing escape velocity from which there's no coming back. And I think it's really sad for America. It's good for Bitcoin. Yeah, hard to look at that number ticking up towards 40, then it's going to be 50, then it's going to be $100 trillion, and not think, I feel pretty good about the 21 million Bitcoin that exist.
100%. And now we've got a new man at the head of the Federal Reserve. He just had his second FOMC meeting yesterday. I'm sure you've watched many of these in the past. What was your takeaway? There was a lot of mixed reaction as to his performance yesterday. What was your take?
Well, look, I think the mixed reaction comes down to what you want from the Fed. If you want the Fed to be your daddy and bail you out of every market pullback and infinitely print money until we go to $1 billion, then you're not going to like the Kevin Warsh Fed. He has a very modest view of the Fed. He doesn't think it should be the biggest single force in the market. He thinks it should listen to markets. He thinks it should be reasoned and measured. I took extraordinary confidence from what he was saying, that we have an adult in the room who's looking at the data and listening to the data and likely to chart a modest course for the Federal Reserve that looks more like the Fed under Greenspan than it did under Bernanke and Powell. I think the negative reaction to it is that the Bernanke and Powell Fed gave investors this sugar high, and it continually doubled down on this sugar high. And I think Warsh is saying, I'm not going to do that. For what it's worth, in isolation, that would be bad for Bitcoin, right? Because it's a government that's more under control, right? That was like, Bitcoin's a reaction to that control. In the end, I think it's good for the US. I think Bitcoin wins anyway because the spending is out of control, and that's not within Warsh's remit. But I think that's what the mixed sentiment was. Some people want the Fed to step in and bail it out and add fuel to every fire, and he's just not going to do it. I thought it was extraordinarily competent, extraordinarily reasoned. I think he's listening to multiple voices. I think we're all lucky to have him at control of this important agency.
And so much of it, of course, is appearances, right? What people take away from the minutia of the words in which he says, the red lines through the statement. And he came in sort of with a mandate to cut, right? That was the whole entire story of Trump, of the last year in the nomination process and all this. But he's held steady the last two meetings. What do you think a rate cut would do to this economy that's so juiced up on the AI trade?
Yeah, I mean, it would probably cause it to overheat. That's why he's not cutting rates. It's important to note that he is playing the dovish hand, right? Because you saw 3 Fed governors push for rate hikes. Under a different leader, I could imagine we would be hiking rates already, and we would be ignoring productivity gains. We would be ignoring other weaknesses in the economy. So it felt right to me that he kept rates where they were. I think, yeah, cutting rates when unemployment is extraordinarily low and inflation above target, if that feels like a sugar high, right? Like we all sort of want it because our bags would go up. But would it be good for the market? No. Like, if he's going to get us back down to 2% actual inflation, it's probably not the time to cut rates. There may be a time in the future. For what it's worth, my general view is that we're just going to get more modest changes in the Federal Reserve rate. If you think about, since Bitcoin came into the market, we had interest rates at 0 for a long period of time. And then they spiked to 2.5%. And then they crashed back to 0. And then they went to 5.5% in the fastest rate hike in history. And then they've come back down to 3.5%. It's this crazy yo-yo. We need to be talking about basis point changes, not percentage point changes. I think the Fed under Warsh is a basis point Fed, not a percentage point Fed. So I think we just have to get out of our hand that we need this drunken sailor at the wheel doing this with interest rates. I think it's going to be more like this, more incremental. And the market is going to do the work, which is what we've seen with the market sort of tightening all on its own. I think that's just healthier for the economy.
And I think when it comes to Bitcoiners, one of our long-term dreams is that we live in a world without the need for this sort of monetary policy, where a man comes down from on high and gives a speech, and literally hundreds of billions, if not trillions of dollars are moving on every single word of which he says. Do you think it's actually possible that we will one day see a world within our lifetimes in which the words of a Federal Reserve head of the United States don't really matter that much?
Well, look, that's kind of what he said in his press conference, right? He said, look, we didn't change interest rates and we didn't provide forward guidance, and the market took care of it on its own. The market tightened on its own across the curve. So that is the direction that he is pointing in. Again, Bitcoin, big picture, is a response to this extraordinary intervention in the economy that we've seen since the great financial crisis, right? The Bernanke, Powell, Fed, trillion-dollar bailouts, etc. Warsh is like one example of going back to a more normal world. Will the Fed still be important? Of course, the Fed will still be important. It does set the Fed funds rate, which is an anchor for the economy. That's the way our economy is architected. It will be many years until that's not true. But actually, I think this is sort of returned more to what Bitcoiners are asking for in the market. And of course, Bitcoin is providing the check against the extravagance. The real challenge for the economy is Warsh is only controlling this. You still have this debt and deficit on the other side, which is just spiraling to infinity. And there's no sign, I mean, I don't have to tell you that. That's not going to get under control. There's just no appetite to do that.
And it seemed like in 2025, the world was sort of waking up to this. The debasement trade was the word of the year. We saw gold and silver and Bitcoin all rally to new highs, but that's cooled off. Why do you think the idea of the debasement trade has completely disappeared from the modern consciousness, despite the fact that the debt keeps growing?
Yeah, I mean, I think it's just the AI trade got too sexy. It was too easy to print money in memory stocks. It was too easy to print money in hyperscalers. It attracted all the attention. There's always an attention trade in the market. There's always something that's soaking up all the sort of juice. For a while, it was crypto. Then it was gold for a little brief moment. Now it's the AI trade. We'll see what it is next. I think part of it will actually be crypto. Part of it likely to be energy, a few other things likely to get sort of the attention trade. But I think that's the answer. The important thing, I think, for retail investors to realize is that the debasement conversations haven't ended at the largest institutions in the world. So that idea that you need a hedge against debasement is still percolating in sort of the TradFi institutional space, and people are going to increasingly allocate to that. So I think it's just quieter. I don't think it's gone away. But I think the reason it's quieter is just AI has been shouting from the hilltops so loud it's drowned everything else out.
Yeah, that hot ball of money that's coated in retail attention. It's been ping-ponging around, and we're waiting for it to come back to Bitcoin. But you say the institutions are still interested, correct?
Oh, 100%. These things are oil tankers. So I don't know if you're not in the meetings that I'm in, and we do like 15,000 meetings a year. It's hard to understand what it's like when you go in and meet with a large institutional platform. They started turning their ships toward Bitcoin and crypto in 2024 when the ETF launched. And it's almost as if there is no bear market. Like they're almost completely ignoring the bear market or accepting that it's normal. What's a good example of this is you see Morgan Stanley rolling out crypto ETFs, or you see Wells Fargo adding crypto to model portfolios. For a retail investor, that might be like a head scratcher. Like you're rolling out crypto ETFs now in the bear market, or you're adding crypto to portfolios now. And I have those conversations with dozens of platforms every week. But the thing is, that's just the cadence on which they move. They know that this is a volatile asset. They know that it's a cyclical asset. They invest in plenty of volatile assets and plenty of cyclical assets. They view these portfolio allocations on like a 10 or 20-year time frame, and they're just slowly orienting around toward them. We haven't seen the flows from that community yet. We've seen like a trickle. I think there will be tens and hundreds of billions of dollars flowing into the space from those large institutions over the next few years. And it will surprise people because they think they'll have stopped because we're in a bear market. They haven't at all. They're just orienting around toward this huge opportunity.
And I heard you recently say that you thought that the 4-year cycle was over because you're just talking to too many institutions. They see a 10-year super cycle. Explain that.
Yeah, that's right. So I did say that the 4-year cycle was over, and when it clearly wasn't, because it clearly isn't. It's repeating, as you mentioned, almost precisely.
Wait, you're telling me I can win free Bitcoin every day just by dropping a chip? Check out Sats Drop from Rhino. You get 3 free drops every day with chances to win up to 10,000 sats instantly. And if a super drop activates, we're talking bonus drops, multipliers, and jackpots of up to 100,000 sats redeemed right in your Rhino wallet. Sign up for free now and start stacking sats.
I had to go back and see what I got wrong. And what I got wrong was my days full of these meetings, which is a 10-year super cycle, right? These large institutions, it is just a runaway bull market. They're positioning for Bitcoin's growth. They're positioning for the growth of stablecoins and tokenization. They're considering DeFi. It's just bullish. And I just didn't have enough meetings in my calendar with retail investors who still control 2/3 of all the Bitcoin, right? So, like, to some extent, who cares what institutions are doing? They only have 10% of the Bitcoin or whatever. You need to spend most of your time talking to retail. And I just ignored that. And for retail, of course, they were positioning to get out of the way of the 4-year cycle. Now they're starting to position to get in the way of the 4-year cycle. So I actually think a headwind has probably started to become a tailwind for Bitcoin with those people coming back into the market. Not all of them, but some of them. You see that in the long-term holder allocations hitting all-time highs. You can see that a little bit in sort of volume activity. But yeah, that was my mistake. You always have to interrogate yourself when you get something wrong. What I got wrong was spending too much time with institutions. I've tried to balance my calendar more since then, so I have a more holistic view of the market.
Well, I appreciate you coming on to shows like this so you get a feel for the retail investor and what we're thinking about.
Yeah.
Yeah, absolutely. But you, as CIO, you're sitting in a very unique position. You get to see the inflows and outflows of the ETFs of your own and your competitors. What has surprised you the most about the flows of the ETFs in 2026?
Yeah, mostly that they have performed so well. So if you think about the scale of the crushing bear market, in most ETF spaces, you would have seen massive outflows. And for sure, we saw outflows out of Bitcoin ETFs. Q2 saw significant outflows. But we only saw, 5-10% of the Bitcoin market give up on the trade, despite a 50% retracement. That to me was a little bit surprising. I thought it might have been a bit more. I have a theory on why that is, which we can discuss. But that to me has been the most surprising thing. The other really surprising thing to me, it actually caught me off guard over the last few weeks, is that the trend of flows changed literally at the calendar quarter. So we had just straight outflows until June 30th. And then from July 1st, we had a mix of inflows and outflows. That told me something really important, which is maybe not intuitive, which is financial advisors, people who manage wealth for other people, have to deliver quarterly statements to their clients. And I think they just didn't want Bitcoin on that statement in Q2. I think they wanted to own Bitcoin, but they didn't want Bitcoin on that statement because it would provoke questions. And so one of the reasons we saw this drop of flows into the end of H1 was just people kicking it off their statement because they take a snapshot on June 30th. That's what they send out. And then the fact that those reversed on July 1st tells me there's real institutional interest in this space. So that was like a cute quirk of flows that caught my attention over the last couple of weeks.
And let's double click on what you said. Also surprised you was you thought there would be more selling.
Yeah.
Right.
Yeah. Well, if you look at any other, look, I come from the ETF industry. Before I joined Bitwise 8 years ago, I was the CEO of ETF.com. In any other market, if you get a 50% retracement, people just puke their holdings. You would see 50% of the funds come out, or 40 or 30, not handfuls of percentage points. So I was impressed by the strength of holding. The reason for that, I think, is that for professional investors and retail, ETFs are owned by both retail and professional investors, but for professional investors, there's still some element of career risk of allocating to crypto. It's still unusual. It's still odd. It still raises questions. As a result, I think the people who do it have very high conviction. They're not like 51% committed to Bitcoin. They're like 80% committed to Bitcoin. And when you're 80% committed, maybe you're slower to sell when the market comes out. I think that's the message that I took. is that there is still this resistance to allocating. There is still some stigma to allocating. And as a result, the people who do allocate have very high conviction. I think that's what you see in the data.
And the ETFs are over 2.5 years old now. And one hopes for, in the beginning when they first came out, is that they would somewhat serve as a gateway drug. You would get some Bitcoin in an ETF, and then you'd find more interest in it, and then you'd learn about self-custody and owning your own keys. Are you actually seeing that in these meetings that you're having at the institutional level? Do people go down the Bitcoin rabbit hole once they've bought the ETF?
They do, but they go down very slowly. So we do find people who we've met through the ETF who then have much more detailed crypto questions at later conversations. But if I'm being honest, it takes a long time, and it's a select group. The thing we see more than that is people buying Bitcoin, and then this is not a great message for this, but I'm just being honest. People diversifying into other crypto assets over time. So
interesting.
They go into Bitcoin, and then they get excited about, how do I allocate to stablecoins or tokenization? It sort of opens up the crypto asset class to them. So we are seeing that. I'm not sure we've seen an explosion of self-custody yet. I'm still hopeful that we will, but I haven't seen too much sign of that yet.
That's on me. I take responsibility. We got to be talking more about self-custody over here. Absolutely.
Absolutely.
And then the final question on the ETFs, what is the mix right now between retail and institutions?
Yeah, if you look at the underlying data, there's a clear trend, which is that the institutional ownership of ETFs, which started at like 10, 15, 20%, is on its way up toward 50. It's not there yet, but there is a clear rise in institutional ownership, with the biggest driver being financial advisors. So people who manage wealth for, let's say, 50 or 100 high net worth people. That's the biggest driver. I think eventually the ETFs will be majority institutional, maybe 60, 65%. That's something that we see in many different ETF categories. We're not there yet. It's still scaling, but it's in the 30s or 40s, I think, is the best estimate.
The career risk is gone. These guys can advise their clients.
It's going. It's always slower than you think. This whole space is slower than you think. It is going, though. The major platforms now allow you to do it. They're now adding it to their models. They're now having capital market assumptions about Bitcoin, which is how it gets built into asset allocation portfolios. But that process is still going to take another year or two. I do think this community is going to be the big driver of Bitcoin for the next cycle. If you're asked, like, who is the marginal buyer, it's this community driving it to, $250,000. That's what I see for the next sort of cycle of the Bitcoin market.
Because they got money, right? Young retail, 20-year-olds don't have much disposable income to be investing in Bitcoin right now.
That's exactly right. They have money, and they make more money every month, and they allocate every month. Why does the equity market go continually upwards? It's because people need a place to put their money. Right now, Bitcoin is outside of that. It's just sort of creeping in. If you get to the point where a normal portfolio has, 2 or 5% Bitcoin, you're talking about just persistent flows. That means lower volatility, and it means substantial upside. They do have all the money. I mean, investment advisors, depends on how you count, but control something between like 30 and $100 trillion of wealth. That is a lot bigger than Bitcoin. It doesn't take much of that money coming in to really inflect the price. It's sort of incredible that we took this to a $2 trillion asset on the backs of retail investors without any participation from this professional community. And they're now coming into the market.
And when the ETFs first came out, the recommended portfolio allocation was 1%. And now I hear you say 5%. Is that an acceptable number in these circles?
5% is a totally acceptable number. In fact, 4-5% is where many of these institutional platforms come out. If you put on like a CFA style or a PhD style hat and you plug Bitcoin into a portfolio optimizer, it tells you to put something like 4 or 5%. Above that, you actually do drive more volatility in the overall portfolio. Below that, you're basically getting higher returns without an increase in vol. So you are seeing a lot of platforms come out and say something in the 2.5 to 5% Bitcoin. The other big change, the other thing that really changed us going from 1 to 5% is that the 1% was premised on the idea that Bitcoin could go to zero. If I just put 1% into the market and it goes to zero, who cares? You can't do that with 5%, right? 5% you would feel, 5% your mother would feel, your uncle would feel, 5% is painful. So the reason it went from 1 to 5 is I think people downrated the probability that Bitcoin goes to zero. Of course, it could pull back, but other assets can pull back. So yeah, 5% is the new sweet spot. We starting to see some people talk about 10%, but that again, that actually does change the complexity of your overall portfolio. If you're a traditional investor, it makes it much more risky. 5% really doesn't, at least on historical back-tested data.
Makes sense, and you love to see it because 4% is twice as big as 2%, right?
So that's the thing. Yeah, it's so much more scale. Yeah, it's twice as much. It's 5 times as much. You really start to get into substantial amounts of money, and I do think we could see really substantial inflows once the cycle turns.
Well, then I want to slightly pivot this conversation and take it over to the idea of big Bitcoin. You are on Twitter, and you have definitely been witness to the fight that's going on within the Bitcoin community, right? There is the BIP 110 proponents, and there are those who are against the idea. Has this conversation of BIP 110 come up in any institutional meetings? Are there other institutional guys watching Twitter like this?
It's actually remarkable to me that it hasn't. It's interesting to me because in earlier days, sort of the Bitcoin fork would come up, right? Bitwise was founded in 2017, so we had meetings when that was recent memory. We certainly had meetings when Bitcoin Cash and SVs forked, and those conversations did come up. But I haven't heard 110 come up in institutional settings. People are worried about things on the Bitcoin dev side. They're worried about quantum specifically. That comes up regularly. But 110 hasn't escaped the Twitter sphere and entered the institutional world yet, which from my perspective is all the better. It's funny to me because often you get these yeah but questions that delay allocations, and this would fit that. Yeah, but what happens if this would fit that paradigm? But it actually, maybe because it hasn't been covered by the mainstream media, maybe because 110 is not a round number or something. I don't know what it is, but it hasn't penetrated the institutional community, and I'm, for one, thankful of that.
Yeah, I guess those guys over at Morgan Stanley aren't on Twitter as much as we are, so I guess we can be thankful for that.
A funny thing about being on crypto Twitter is like your world can be consumed with something that someone just marginally outside actually has no idea is even happening. And I think that's fascinating. I do, now that we're starting to see some sort of TradFi crypto crossover, people talk about it. Now that like Saylor is talking about it, maybe it gets escape velocity. That can bring it into the conversation. But so far, it's been outside the bubble of institutional Bitcoin.
And mentioning Saylor, he has just come out with BlackRock and Fidelity and a bunch of other big institutions for the Bitcoin Security Consortium. They will be giving funding to devs in order to help better protect Bitcoin against a quantum threat. Have you looked into this? I'm sure this has been in discussions in your circles.
Yeah, for sure. I mean, right, Bitwise donates to Bitcoin core developers through 3 different platforms. We're hands off on what they do with it, which I think is important for an asset manager. We want to support the community, but not tell the community what to do. That's our view of our role. In this case, I'm broadly positive. I'm positive on anyone committing funding to the developer community and to thinking about how Bitcoin can evolve over time, as long as they're not sort of using their financial might to push Bitcoin in any particular direction. I don't think this is that really. I don't think that what they're doing will require Bitcoin to follow whatever path that they find is most advantageous. There are reasons for the Bitcoin community to be worried about this. It's like the kind of thing that we worried about, these big holders of Bitcoin sort of pushing the protocol in a particular direction that maybe is advantageous for them. But I'm more inclined to think that this is just generally positive, that this community is underfunded, that this is additional funding, that we should be thinking about these threats long term, and that maybe this gets us over the hump. If I had to say why they're doing it, I will say quantum comes up. Like, a reason people don't allocate to Bitwise's funds is because they're worried about quantum. And therefore, from a business perspective, if I can get them to worry less about quantum, that drives my business. So if you need like a mercenary reason why they would make this effort, that's it. It's the same is true for BlackRock. The same is true for MicroStrategy. Whether the Bitcoin community cares or not, this is a real blocker to allocation that is out there, and so I'm generally sanguine about the effort.
Yeah, I think Bitcoiners, like, we complain when the big holders do not donate enough to core devs, and then we complain when they do. So it's always something to be upset about over in Bitcoin land. But I think that's sort of what makes us who we are, right? We are Bitcoin's immune system. So we need to vet every single thing that comes through.
That,
But when it, oh,
exactly.
please, yeah.
No, exactly right. I love that. I love that analogy. Go ahead.
And when it comes to quantum, that does seem like the vector in which, if the big money players, the BlackRocks, the strategies wanted to put their influence in, that does seem as if that would be the sort of excuse to say, hey, we need to protect against this. How worried are you about quantum itself? Like, some people say it's a complete nothing burger. Others say we need to be ready by 2029.
Both are probably true. Right? Like, I don't know. Was the Y2K bug a complete nothing burger, or did we prepare for it? I don't know. Both are probably true. My view on the quantum side is I have every confidence that we can be ready for it. I have actually every confidence that the community will broadly protect Bitcoin against the threat. And then I have worries about the challenging questions about what we do with like Satoshi's wallets.
Mhm.
I think that's a pretty hard question without a clear answer that has real consequences. If you pinned me down and said, Matt, you're in charge, you decide, I would be in an existential panic because there's not like a clean, good answer. There are good arguments for doing nothing. There's good arguments for for sequestering them. There's good arguments for there's good arguments all around. I think it's going to be fascinating to see how we develop. So I'm not worried about it on an existential level. I guess I'm worried about it on an incremental level as it deals with these edge cases for which there are no perfect solutions. I have the best solution I've read is sort of Nick Carter's solution about sort of found treasure being sequestered until it's claimed. That's like directionally, I think, probably the direction to go. But I don't even feel confident in thinking that. I just think it's a hard problem. So again, I have an incremental concern, not an existential concern. But broadly, I think we'll get through it. And I'm glad that we're focused on it.
Yeah, it's time to start talking about it for sure. We shouldn't rush into anything because, as we just saw with Claude Mythos, they were able to crack a quantum resistant cryptography. So, going too fast into a new cryptographic solution could be very perilous for Bitcoin in general. We need to take it slow, but we do need to be talking about it. And it gives us plenty of things to podcast about and bicker over on Twitter. So, I welcome it all.
I'll tell you the most useful thing that I do when I talk to institutional investors about it, because again, it's a blocker to them allocating, which I don't think it should be. They're missing out on enormous upside. The asset is dramatically undervalued. It should be $1 million north of coin, and it's at whatever 65. So it annoys me that it blocks them. The most convincing thing I show them is the volume of discussion about quantum issues on Bitcoin discussion boards. That's actually like an incredibly strong piece of data. And when I show them that, and it's gone from like 0 a few years ago to like 50, right? It's a huge percentage of what people chat about. When you show them that, and SF Presidio puts out good documents on this, when you show them that, it basically solves the problem. They're like, okay, the community is discussing it, they'll figure it out. That's actually what institutions want. They want to know that the community is discussing it and they'll figure it out. They don't want to know the details. Like, who wants to know the details? They want to know that smart people are thinking about it. They're not ignoring it. They're going to come up with a solution. So if that's an indication to the community about like, if you want institutions to onboard, the thing to be doing is what we're starting to do, which is discussing it, not doing anything rash, not doing anything that would fracture the community where like 40% says it's a terrible idea, 60% says it's a good idea, but we're rushing ahead anyway. That I don't think is what we want. We just want to be, reasonably focused on it in a methodical way. And I actually think that's where we're getting.
You need to post that on Twitter. Post those charts, and you can reference it in your meetings in
I
one of
will,
your
I will,
15,000 meetings. Yes.
Yeah, exactly.
Cool. So, and a meeting that you're going to be on later today is the MicroStrategy earnings call. And you have also said recently that you think that Saylor's position within the whole entire Bitcoin ecosystem in the future is going to be smaller than what it's been in the past. What's your current take on strategy and the Bitcoin treasury company ecosystem?
Yeah, I think they're entering a 2.0, right? If you think about the evolution of strategy, it really bloomed into the market for a very specific reason, which is you couldn't access Bitcoin through a ticker because there were no ETFs. And so they had this incredible arbitrage. Even Saylor, I think, would agree with that, where they could issue stock above NAV and buy Bitcoin. It was good for everyone. It was good for the Bitcoin community. It gave people exposure. They ended up making a lot of money. It was great. And then they had this interesting series of innovations where they now have like 7 or 8 different levers they can pull to move. But the early phase, I think, is over, right? Now they're entering a managerial phase where there is no easy button that allows them to raise capital. There are only hard buttons. I don't think we've found all the hard buttons. I think there are things you can do with Bitcoin. You can monetize the volatility in other ways. I'm interested how they're thinking about what other buttons there are to push. That's probably going to be the direction of what I ask about. But I think it's right. They own 800,000 some odd Bitcoin. I don't think they're going to double that in the next 2 years. I think their pace is going to level off. I think there'll be net accumulators, but it's going to be more jagged. It's going to be more modest, and it's going to be more difficult. And they're going to be judged on managerial skill. And I think that's the future of strategy. I think the smaller Bitcoin treasury companies face more existential threats because there are challenges that scale really helps you with. And I think they'll have to be extraordinarily nimble to succeed, and not all of them will. But strategy itself is just entering this phase where it's more about managerial skill than market arbitrage. I think that's interesting. And I think if they execute well, they'll be a great thing to own. And if they execute poorly, they won't be. But I think they'll be a more modest player in the Bitcoin ecosystem in the future than they have been over the last few years when they've been the largest acquirer by far.
One thing's for certain is that the whole entire operation has gotten so much more complex, right? And the one thing that really bothers me is that it does seem as if they've got different aspects of their financial structure pointing guns at each other, right? Like you have to sacrifice common shareholders for STRC to do well, and you can sell Bitcoin, to make the common go up. So it's like this balancing act that's very hard. As you said, there's a lot of hard buttons, and I don't know. I think they need to simplify the message, and maybe their message now is just STRC. That's all we care about, and we'll see how that plays. Is there any talk about STRC in institutional circles?
No. Is the answer. Well, that's not true. That's an overstatement. There are talks in the crypto native portions of institutional circles about STRC. I think the challenge for an institutional investor with Stretch is that the claw that forces them to pay the dividend is relatively weak. And so the challenge that people from the outside have of underwriting that is Strategy's ability to just suspend the dividend. It still accumulates, but it's not due till they're insolvent. There's no common dividend that they really want to pay that it has to be paid first from, because it doesn't pay a common dividend. And so that's the thing that institutions worry about. Some people on the edges find it interesting, but broadly it's a retail-led phenomenon. And until they sort of strengthen the covenants that require that dividend payment, I think it'll most likely remain that. a retail-led phenomenon. I could be wrong about that, but that's what we hear from the institutional community so far.
All right, I'm not going to hold you to this, but what would be the hardest question you could ask the team on the call today?
Ooh, that's interesting. I mean, the interesting question to me, what is the hardest question? I'm tempted to say something like, do you wish you never launched Stretch? But I think they would say, absolutely not. It's a great instrument. And I think they would have a good argument for that. So that's like a paper tiger hard question. I think the interesting question is like, is there a period where they do nothing? Is there a period where strategy goes to work every day, looks at all these levers, and is like, nothing's working. We'll just wait. And what does the market do in that scenario? Because I think it's probably likely that one of the hardest things to do in finance is sit in your seat and do nothing. It's extraordinarily hard. Actually, the market is sort of criticizing Kevin Warsh, to go back to where we started this, from sitting in the most powerful seat in finance and doing nothing. They're like, do something, raise rates, lower rates, tell us the prediction. And he's like, no, we're just going to see what happens. I think the interesting question for strategy would be, is there a market where it just sort of sits there and waits for Bitcoin to do something? Is there an equilibrium at which strategy is in the right space? And that, to me, that would be fascinating to know. I'm not sure that that's what I'm going to ask about, but I do wonder about that. It's not something we've seen really out of strategy, at least over recent times, just doing nothing.
No, there's been a lot of activity bias. Absolutely. And if there was a perfect time to pretty much sit on your hands, it would be right now. They've got over $3 billion worth of cash. Bitcoin's not doing anything at the moment. And we've been diluted as MSTR common shareholders enough. I think you can chill. And let's see.
You could chill, right? You could chill. You could say, look, we think Bitcoin's going to $100,000. When that happens, there'll be all these things we can do. You won't be asking about, do we have enough money to pay for the stretch dividends? You won't be asking. Maybe just, yeah. But activity bias, as you said, is hard to overcome. So I don't know. What would you ask him, Rob?
Man, you put me on the hot seat. What would I ask Michael Saylor? I would ask Michael Saylor, what's the best party he's ever been to?
All right.
That's my question, my personal question for Michael Saylor.
If I ask that on the call, you gotta send me like a nice T-shirt or something.
Will do. Some Bitcoin news merch. Absolutely. All right. Well, then let's look forward. And you put out a piece on the next bull market, and you talked about hype. You talked about Robinhood, right? And tokenization. But where does Bitcoin fit into all this?
Great question. I think Bitcoin and crypto are actually going to decouple. I think Bitcoin is a runaway bull market for the next 10 years. As I said, our official forecast, we think it's going to 1.3 million by 2035. I think that's probably conservative. And I think it's easy to project how it gets there mathematically. So I think Bitcoin is just going to trudge higher. Most institutional investors who allocate to crypto are going to start with an allocation to Bitcoin. Everyone who's participating in the stablecoin and tokenization space is going to end up owning some Bitcoin. I think it's just this like quiet, persistent bull market. I think it's the best risk-adjusted trade in crypto. That means I don't think it will be the best performing crypto asset over the next year. But I think on a risk-adjusted basis, it will be the best investment you can make. What I was writing about there is there's this separate, if you look back across the previous cycles, every cycle had a new thing that sort of catalyzed the growth. So the first cycle, the 2011 to 2013 cycle, the new thing was Bitcoin, actually being able to buy Bitcoin, right, on Coinbase, Mt. Gox, whatever. That was the new thing. The 2015 to 2017 cycle, the new thing was Ethereum, programmable money. The 2019 to 21 cycle, the new thing was DeFi. The most recent cycle, the new thing was an ETF. I think the new thing for the next cycle is stablecoins and tokenization. I think that's a runaway bull market. I think it's great for DeFi apps. It's great for companies like Robinhood that are positioning for it. But through all of those cycles, it's worth noting that Bitcoin went from $1 to $125,000. And so there's nothing about my article saying that like stablecoins and tokenization are going to be a big thing that stops Bitcoin from going from 60 to 250 or 400 or wherever it's going in the next cycle. I feel every confidence that's going to happen.
And is there any way for Bitcoin to get involved in tokenization?
Well, that's a good question. Look, I think it's the digitally native money.
Yeah.
I think it's just ancillarily beneficial. If I tell people this: if you imagine 1 billion people having a crypto wallet, do you imagine that happening with none of them owning Bitcoin? Right. It's impossible. What percentage of the people who are onboarded to crypto wallets because of stablecoins and tokenization own 0 Bitcoin? Like, let's say 20% of them own Bitcoin. That's 200 million wallets that will own Bitcoin. Let's say 30%. That's 300 million. How many people own Bitcoin today? It's not 200 million. Like in substantial size, it's not. So you could double the number of people that have it. That sounds pretty good. So I think it's this sort of sidecar tokenization that gets a free lift from all the work that's going on there. And we shouldn't feel bad about it. Just because Bitcoin is going to end up the most valuable asset on earth doesn't mean there aren't other valuable assets, right? Companies will still be valuable. Bonds will still be valuable. Real estate will still be valuable. There's a whole world out there. So I think Bitcoin would do just fine in that scenario.
All right. Well, I think that's a beautiful place to leave it. Matt, this was so much fun. It's great to be on a second podcast with you, build up that rapport, get to go a little back and forth, have some banter on the middle of summer here.
I love it. Thanks for having me. This was a lot of fun.
Cheers, Matt. Until next time.